And today, the market is in the red. The stock market is down. But that doesn't stop us from continuing our video series on how to buy stocks with each of the brokers we all know. We've already made a video about Happy, we made one about interactive brokers, which I'm not sure is uploaded yet, and we're going to keep making videos about XTB, Trading 212, and so on. So if you want me to make a specific video about any platform, just let me know in the comments section. Also, if you want me to do something else, not just how to buy a stock, but to show you something different, leave it in the comments, and I'll make specific tutorials for each of those things. This time, we're going to talk about eToro. eToro is a broker that you could say was one of the first I ever used, if not the very first. It's just that, well, recently they made some regulatory changes that a lot of people didn't like. I'm still under UK jurisdiction, while many others switched to Seychelles. I think that's because I don't have money invested here anymore. I used to invest with eToro, but I closed my positions, withdrew everything, and moved to other brokers. Not that eToro is bad, but they have certain things I don't like, such as their deposit methods here in Colombia. But anyway, today we're going to cover how to buy from the virtual portfolio. For those who don't know, over here on the left at the bottom, you have the option to switch to virtual. What's this for? This gives us $100,000, obviously virtual, not real. In this case, I've already brought it down to $78,000, and it's simply for that, for testing, for losing, because it's not real money. But we will be interacting with the stock market in a way that's very similar to how we would with real money. I mean, it's actually the same thing, except obviously if I turn these $100,000 into $5 million here, I'm not really earning anything at all because it's just fake money. So the recommended thing is to start here first. If you're just getting started, get to know the tools that eToro offers. And from there, you can start depositing funds and real money that you can invest, and even be willing to lose. You already know, it's a rule for investors who really know what they're doing. So anyway, this time we have this money here. On eToro, we can buy stocks, ETFs, and we can do it through CFDs or by buying the underlying asset. For this example, we're going to go to Home to the Discover page where we have all the options for investing. We have stocks, cryptocurrencies, indices, commodities, currencies, ETFs, the copy trader options, smart portfolios, NFTs, and things like that. For this example, we're going to focus exclusively on stocks. If you want me to explain anything from up here, just let me know in the comments. Like I said, once you're here, you'll see the stocks that are available. There are actually a ton of stocks from all kinds of markets, so each of you will need to choose what you want to invest in, obviously after doing your research. And this time, let's see, for example, if we look up Nvidia, which I think has dropped a bit today, but anyway, the market analysis shows the current price, the stock's performance over the last 30 days, and the target price, which is 905.66. These are just analyst forecasts, not a guarantee, so you shouldn't rely on them. They are simply opinions from experts who know the subject. If anyone actually knew the absolute truth, then everyone in the world would be a billionaire just by following that person. So anyway, once we're here, we simply choose the stock we want to invest in, which at this moment is at $877.68. Here we have all the information, how it's been doing, its most recent performance over the last day, 1 week, 1 month, 6 months, 1 year, 3 years, and since this stock was first created. Then we also have the current market capitalization, the daily range, and the 52-week range. That is the price variation from 52 weeks ago up to now, showing how much the price has changed. Next, there's the ESG rating, which we know is now an index that also measures certain aspects of companies, mainly what it says here: environmental, social, and governance factors. And here we have some posts brought to us directly by the eToro community, or by people who simply invest here, where they share their opinions, reasons to invest or not invest in eToro. So here it's kind of like a social network for stocks, so to speak. Then once we're here and we've looked at the chart, the analyst section, the news, the statistics, and so on, we can go ahead and invest, which is up here on the top right. You click this invest button and this box will pop up. A word from our sponsor. That's right, our sponsor is me. And if you're interested in learning about finance, how the financial system works in Colombia and how to take advantage of it, or how to make money online, and even how I personally make money thanks to YouTube, I've left a link in the description with all our courses. All right, let's get back to the video. Go ahead. Let's start quickly with selling, because honestly, there's not much mystery to it. I'll explain this in more detail in a moment, but the difference between selling and buying is that when you buy, you're basically betting that the stock is going to go up. In other words, that it's going to go up from 879.39 to 1500, for example. But if you hit sell and buy shares, you're basically betting that the stock price is going to go down. In other words, that it'll drop to $800 or $700. So it's like going against the trend. This is called shorting, or doing a short in English. So, well, that's just to help you understand it a little better. All right, now let's see how in both cases options basically work the same way. So I'm going to explain it in the buying section, which is what most people usually do, or what this tutorial is aimed at. But in the selling section, it's pretty much the same thing. So let's get started here. First, we have the option to invest by amount. For example, if we have $1,000, that is equivalent to 1.14 units of this stock. If the price looks slightly higher than shown here, it's because of the spread, which is eToro's commission, and how this broker makes its profits. Then it shows us whether the market is open or closed. What is this named? If the market is open, then we can make the purchase, but if it's closed, we can still do it. So what will happen? The stock exchange where this Nvidia stock is listed has its own schedule, so each of you should check which exchange the stock you want to invest in is on, look up its hours, and see how those hours line up with your own country. Because it might say from 7 in the morning to 3 in the afternoon, but the 3 in the afternoon in that country or city might be 1 in the afternoon in your country. So you need to check this specifically. And well, if you do it while the market is closed, what happens is that you can leave the order open and it'll be executed as soon as the market opens. If it opens at 7 in the morning, then it gets executed. But if you're unlucky, if you're just not having a good day, you might place a buy order at 879, and right before the market opens again, the price shoots up, and now the stock is at 890. So most likely, your buy order won't be executed because it's already below the price the market is offering. But anyway, here under amount, we can select it, like I said, by dollars, or we can switch it to units, and here we can buy by share specifically. That is, I can buy 50 shares, for example, of Nvidia, and it tells me that costs $43,969. This really depends on each of you and how you want to do it, and this is where the topic of fractional shares comes in, which we can do with eToro. And what does this mean? Well, I can buy a whole share, which would be this value here, but I can also buy half a share, so that would be this value here, and so on, like 0.70, 0.80, and so forth. This might seem normal, but some brokers don't allow fractional shares. You have to buy whole shares, like 1, 2, or 10, but you can't buy 30.27. Only whole shares are allowed. In this case, we can do it both ways. Now next, we have 3 options here, and this is going to vary a lot. In my case, depending on the regulation applied to your account, you'll be offered more or less leverage. So you might get 1 to 20, 1 to 50, 1 to 100 leverage, depending on the regulation you're under. In my case, under the regulation I'm in, I'm allowed a maximum leverage of 5 to 1. What does this mean? It basically means I'm going to invest with money that isn't mine. In other words, I can buy a stock. Let's switch this to units here, or 1 share, and it turns out I can set it to 5 to 1 leverage here. And notice that now, the stock I'm buying, I'm no longer buying just 1 share. I'm basically buying 5 shares. But then, where does the rest of the money come from? Think of it as if they're going to lend it to me, so I'll end up in debt. Leverage is something I never recommend, especially if you're using ratios higher than 2 or even 5. I always recommend investing with your actual money, just as it is, because with leverage, obviously, if there are big gains, you get a lot, but if there are big losses, they multiply. So, well, I prefer to keep it at 1 to 1. 1 to 1 doesn't mean we're using leverage. It means we're literally investing what we have. And then it says you're buying the underlying asset. What does that mean? It means we're literally buying the stock that we're acquiring, for example, Nvidia's. But what happens? From our perspective, this ensures we have the stock, but from the market's perspective, eToro actually owns the actual stock. We also have a CFD option, which is basically a contract. It's as if right now you sign a contract with eToro and told them, look, I bet you that I'm going to buy a share of Nvidia and it's going to reach $1,000. And all the profit I make from what I buy up to $1,000, you're going to pay back to me. It's like a bet, so to speak. You're making a contract directly with eToro, not directly on the market. So that's the big difference between buying the underlying asset and the CFD. Then on the left side, we have a stop loss, and on the right, a take profit. So let's start from left to right. The stop loss is basically a way to pause your losses, or simply lose less than you otherwise would. That is, let's say you buy this stock at $8.79 and tomorrow, by some twist of fate, the stock drops to $800. In other words, it goes down almost $79 in a single day. What happens then? Well, I don't know how many people have the time to watch all day to see if a stock goes up or down, but a lot of people just don't have that availability. So if you invest these $879 and you're only willing to lose $79 if the stock drops to $800, then you set your stop loss at $800. What does that mean? It means that when the stock hits $800, the sell order will automatically be executed, or rather, your position will be closed so you don't lose more than that amount. It'll automatically close at $800, and that's the money you'll get back. With stop loss, we can choose whether we want to use it or not. For example, we can choose not to use a stop loss, and if the stock drops to $100, we'll just have to take that entire loss. So it's really up to you whether you want to add a stop loss or not. Now, as for take profit, it's basically the exact same thing as a stop loss, but the other way around. Instead of losing money, how much are we willing to cash out or gain? What happens with this? A lot of people would probably say, I don't want to set a stop loss because I want to make as much money as possible. Why would I set a stop loss? Yes, but sometimes people want to cash out before the stock starts correcting and drops too much. So for example, maybe right now you invested $880 and in a week the stock goes up to $1,500 for instance, and you see it climbing and say, wow, that's amazing, I love it, I'm just gonna leave it there forever. But then the stock corrects, some news comes out or something happens, and it starts dropping all the way down to $700. What happened? Well, literally what it says here is that you didn't take profit, you didn't cash out, so by not taking profit, you missed the chance to cash out, to get that money, and in the end, you have to wait for the stock to recover and all that. Some people say, well, I'm gonna invest here, and I think that in 2 months, this stock won't just hit $1,000, but it'll reach $1,500. So they say that as soon as this reaches $1,500, it will trigger the closing order for your purchase at $879. So you get your money back along with your profit, which would be the difference up to $1,500 if that happens. After you invest, you just have to wait for that to happen. You can remove this again, the take profit, and you can leave it without a stop loss and without a take profit. What does this mean? It means you won't have a loss limit or a profit limit, but obviously in both cases, you have to keep an eye on it because eToro, no matter if the stock drops to zero or goes up to $500,000, won't close any order. This is now yours. If you executed it and you have one NVIDIA share and you forgot your eToro password and you could never log in again, well, that will just stay there completely untouched. So that's why you need to be alert if you want to add a stop loss or a take profit. Once you've chosen this, you just click set order and it goes to the market. On the sell side, it's pretty much the same, except here, even without leverage, we're investing through a CFD. Now here, well, if we want to do this, we're going to remove the stop loss and also remove the take profit, and then we'll set the order. In this case, what happens? Well, no purchase is made. Like I said, an order is created, and if I go over here to portfolio, since the market isn't open right now, it'll show up like this, pending opening. So it says, you have a pending buy order. In other words, I just placed the order, but no purchase has been made because the market is currently closed. Once the market opens, that's when this offer is placed and the possible purchase happens. Now, I want to give an example here. When you already own your stock, you just come here and click where it says cancel, although it won't actually say cancel, it'll just be an X, to close your purchase, to close your position in NVIDIA. Basically, this is what we can do with anything here in the Discover section. You go to cryptos, to indices, to commodities, to currencies, and you'll notice that, for example, let's say we use an ETF as an example, the VU, it shows up pretty much the same way. Obviously, each one will have different amounts because every stock or ETF has a different value, and it's literally the same thing. For example, let's go to cryptocurrencies now. Let's pick Bitcoin, let's click invest, and you'll see the same thing happens, but in this case, it doesn't give us the option to use leverage. Only some options might be removed, but otherwise, the trading function works exactly the same. Even though we know cryptocurrencies don't have a traditional market, the market never closes. It's open all the time. So if I place an order right now, it goes through immediately without any issues. It executes instantly, and I can set it at a good price. That's basically everything. Hope you enjoyed this video. If you made it this far, leave a little bull emoji, since I don't know if you've noticed, but eToro's logo has little horns, and that's actually why it's called eToro. See you next time. Bye-bye.